I had written down the hope of the vaccine rally in November, but I didn't think it was going to happen so quickly, especially with the presidential elections and fiasco going on. I kind of forgotten about the vaccine and the hope of the vaccine and the rally for November. But obviously, Pfizer chose to release the news to help Biden and the Democrat because Big Pharma benefits from Democratic policy, especially with Obamacare and the funds and the programs that would help them. So yeah, so it's released, and obviously you got the big rally. Now there's some sell the news, especially on the techs, and obviously the QQQ gapped up a fairly large, a gap up, and here it failed, and it failed because all of the stay-at-home companies that were benefiting from the policies of COVID and whatnot, Amazon, Shopify, all these stay-at-home companies, Zoom, Netflix, they all got hit pretty hard. And since they started selling off, obviously the techs, or the QQQ, obviously started falling, and then well, selling beget more selling, and then so you got a big sell-off. Now, the SPY and the DIA, they're still doing fairly well. Obviously, if you're gonna play the long side, you want to stay with the SPY, the DIA, IWM. The biotechs, I think, should benefit as well. And that's probably if you want a bottom dip. And of course, the financials should do fairly well given the news. Now, you got the other, you know, stocks that have been hidden or been pretty much depressed because of COVID, like jets, which are the airlines. This ETF, any downside, any retracement to this level should looks pretty good. Of course, Boeing, um, yeah, Boeing should looks pretty good on a retracement. I don't know if it's gonna retrace. It may just keep going. And of course, the cruise liner like a Norwegian cruise line should benefit, and along with the oils like Valerio, and just an example what I look at neighbor, but any of the Exxon, Mobil, Chevron, all those companies should benefit. Now, what I normally play the QQQ, the tech. So this is obviously very negative. These two down volume are fairly substantial, and technically it looks pretty bad. So this huge green candle, um, essentially you got this gap up and it failed. Like I said, it failed. I penetrates this a little bit, but it failed the top candle. So that was an obvious reversal. I mean, very obvious reversal, right? So you got essentially it penetrate this top a little bit, and you got the reversal and a boom. So that's a fairly easy play that I missed because essentially I was just pay I just yeah, I got caught with Amazon and trying to massage this whole fiasco with Amazon, which is now very bearish. Um, Amazon just looks very bearish at this point. The volume looks bearish. The McCullen oscillator looks bearish. It's below the 100-day moving average. So the best hope essentially with the big techs, the QQQ, Amazon, is essentially you just gotta wait out the downside and hope that it doesn't give any false signal where it try to go up and it'll trap you if you somehow impatient and you got in hoping to, get a recovery, or if there was a stimulus news or potential talk of a stimulus that would rally, that would be not the ideal situation. The ideal situation is actually on the downside, hoping, more shorts would get in, more negative news, whatever, COVID, continuing to go up, whatever news they want to use as an excuse to sell off the market, or at least the QQQ. If there's more buying in the SPY, more fund management, more fund rotation into the SPY, the DIA, the IWMs, all those rotation should be negative to the QQQ. And as more selling, you may potentially get a mini crash or a flush. You really want to get a flush. And the reason why you want to get a flush is because um, it's just more powerful when you get a level of support where there's a lot of shorts and a lot of sellers, or a lot of stops hitting on sellers in their portfolio. If all of this was, back down here, the sentiment be very negative. You have this 100-day moving average and you find support there. So you got a lot of shorts and a lot of people who got stopped out. And that's potentially very bullish for the stimulus news and also the Q4 retail, the end of the year, with this the retails and positive and the environment with Christmas and Black Friday and all that. So that should spark a fairly strong rally, only if it can sell off and continue to sell off, and technically hoping this McCullen oscillator will go negative, similar to this guy. And you want just more sell off because it allows for it's like a snapback. It allows for the rubber band to just pop back, and on the Q4 buying, Black Friday, Christmas, and hopefully the stimulus news and more news from the vaccines. So that potentially will give you a huge gain from here to here. So that's what I'm hoping for. I'm hoping for the QQQ. Now November 20 is too early, but let's just say December 18th. You can buy. I would probably buy the let's just say one of these guys right here. No, wrong direction. Yeah, like 290 or 280. No, that's 290. Let's just say 290. Um, so here it is down here. So if it get flushed down to, anywhere down even low, or even 300, no, 280. Let's just say 280. Go all the way down here. Then you can buy this and dollar cost average. And it should rally. I mean, that's the only way you're gonna make money in this environment, is to get it when it's, find support. Now, obviously, it can crash, but you just gotta play for the stimulus, eventually the stimulus plan and the Q4 earnings play. So that's just the only way to play. Now, if it doesn't do that, then it's a lot more tricky, because if it starts to rebound here, it's just potential traps. And yeah, you're just gonna feel the pain if try to catch it on the way up, and boom, whatever happened, it goes back down. So that's not very fun. I prefer it to just follow the discipline of what this is. These two selling candles, red candles, are pretty strong. They look kind of like this, so you should have, hopefully more downside. Now there may be some consolidation, but hopefully more downside. You want to stay away from all the stay-at-home stocks now because they're not gonna give you any uh, rally at this point. I would say you want to stay away from the stay-at-home, and hopefully they can downturn a little bit more, and then you can try to get them. But stay with the good ones. Amazon, Shopify, um, you know, uh, Chipotle, Nvidia, TTD, Roku. You don't want to go with Peloton. It may be dead. Stay away from like Etsy. Any of the Costco is okay. That's a good one too. But even Zoom is a potential high risk, and all these other, actually Beyond Meat is actually pretty good since it got hit. But obviously right now they're still way, way too expensive. So you want to hope for the continue retracement. At least that's what I'm hoping for. Amazon is going to give you a very good opportunity, um, if it just sells off for whatever reason, and go all the way down below 3,000. If it's actually, it shouldn't hit the low here. That's way too low. But even if it gets anywhere 29, that is a potential. That's what I would want to hope for, best case scenario. And Black Friday is going to be good. So you can probably, sell. So at 3,000, this would probably be close to 200. So if you can sell one put here at 200, yeah, that's 20,000. That's what I'm hoping for. That's 20,000 if it, push all the way down here. And it should rally by the time it gets to December 18th. It probably won't get to zero, but even if it gets to 50, 60, whatever it may be, yeah, back here, 50, 60, that's 15,000. And that's a pretty good play. Also, I'll probably buy uh, some some cars, that those are pretty decent as well. Not right now, it's way too expensive at 169. Um, Probably the 3100. This one may potentially be cheaper if there's a flush down to. I wouldn't want to buy any. I may even go to the 32. But I definitely want to buy anything in the 30, 40 range rather than right now. It's still way too much time, way too expensive. So just gonna wait out and hope for a crash. Cause at this point, yeah, any rally. I mean, you can't play anything long term right now because it definitely can go back up, but it just also can go back down because the technical is now going the opposite way, so I wouldn't want to risk anything long term. Just too risky right now for anything long term. Plays that I would probably want to be in. Baba looks like a nice recovery potential. You can see Baba. Um, right now it's what did it close at? 266. So 266, here it is. Looks like a support level. I mean, it's hard to say, right? It can keep definitely go down to here. So I mean, it looks like a nice play because you got the strong rally, but you know what? You never know. It may be, more selling. So even that is risky. TTD obviously would be a good play, but it's so expensive as well. All these plays are still way too expensive right now. Even Shopify with that correction is still way too expensive. The cheaper play might be like Mastercard. But yeah, it's still way up here. But Home Depot. Let's see if that corrected. Yeah, Home Depot is pretty decent. Maybe Costco. Still relatively expensive, but they're safer plays instead of the high tech. I would stay away from the high tech at this point. Even maybe just stay with the index too. I mean, if you load up on the indexes, now again, the SPY is now expensive, the DIA is now expensive, the IWM is now expensive. So, maybe the solar company should benefit under the Democratic policy. So this 10 for solar should be okay to buy. You got, somewhat of a pullback. Still looks fairly expensive, but it's hard to. Sometimes they just recover, and then you can never get it back in. So it's never an easy play. They're just candidates that sun run. If you see them start to run, then you can. Now I got into Big C. I think this is a potential good one because it's this is a decent level. It's a cheap company. It should eventually get back to 100. And you can just hold on to it for a while. Eventually, it gets to 100. The other one, I mean, this one is still relatively expensive. Is Beyond Meat. But you know what? Yeah, anywhere in the 100 looks fine. Roku is, of course, one of my favorites, but it's still way too expensive. Tesla, let's see, Tesla, yeah, it's still way too expensive for me. Let me see what Neo should be way up there. Yeah, that's way too expensive. Way too expensive. I would stay away from those. Any other good one? Qualcomm should be decent. Some of the chips. Yeah, I mean, it's still so expensive. Let's see what the SMH is, the semiconductors. Um, yeah, semiconductors. Any further weakness in semiconductors? They definitely should outperform the QQQ. And so that's, I would stay away from like the blockchains and all the stay-at-home stuff is now vulnerable just because of the potential, the cloud computings and all that stuff, just because of the vaccines. So you want to stick with what would be strong. If there's retracement, so Jets, the airlines, American Airlines, United Airlines, one of those guys, and of course, you got Carnival Cruise, Norwegian Cruise Line. Uh, those guys should be okay. I mean, they got a lot further to go up. And of course, the oils, you got ExxonMobil, Chevrons. Those guys should, start to go up. Especially with now that, once they get rid of all the fiascos with the presidency and transition toward, most likely Biden is the president, so you will transition toward a Democratic, and so you want to look for candidates that will benefit. And I think the drug company should benefit. Now, Pfizer, not Pfizer, Biogen. This one got hit. I think this one is fairly pretty good to hold anywhere down at this level. I mean, eventually this guy is going to pop. So I would, and I mean pop higher. So this one I definitely would want to get in with a little bit more weakness. So yeah, so The plays really, to me, is to just hope for a weakness with the QQQ, continue weakness in Amazon, continue weakness in Apple. Eventually, maybe hope for a flush. If I'm lucky, there'll be a flush. And then that's when you start dollar cost average and load in because you know the stimulus is coming. The Q4 retail results was gonna, especially with Black Friday, that's gonna just a lot of people just gonna leak out so much good things about, and maybe even like the sell the gaming stocks like Take Two. I mean that's I mean down here it's going to have a very strong Christmas buying. So, yeah, you just got to start playing for that Christmas rally that's coming. But, right now everything still looks fairly expensive. So, just hope for whatever bad news can come and get this to flush. For me, if Amazon can get below 3,000, I mean, that's just anywhere down here. That's probably would buy it for my 401k as well. Now, I don't know. I'm not saying I'm going to hold for this for long term. I think eventually, when the vaccines is released and all these should go further down because the feds will start pulling back money. But that's something to talk about later on is when the vaccine actually that's for next year. But right now you just want to play for the Christmas rally and hope for the retracement.